Ladies and gentlemen, warm welcome to each one of you for study circle on the topic recent amendments of the GST. We have speaker CA Gella Praveen Kumar with us to present on the topic. I request Chairman Shri Shravan to kindly escort him on to the desk. I also request Chairman to kindly welcome our speaker with a floral bouquet. Round of applause, ladies and gentlemen. Thank you, Chairman. To briefly introduce, CA Gella Praveen Kumar is a science graduate from Kakatiya University. He has finished his MBA from Cochin University of Science and Technology and also graduated CMA. Since 2009, he is in practice with specialization in internal audits and indirect taxation. He has been identified by ICA as Master Trainer for the GST sessions. So he is also visiting faculty at ICM Institute since 2011. With this brief introduction, I welcome you for today's session.
I thank Bangalore Chairman, the Management Committee and the members present here for giving this opportunity. Topic for today's evening, general topic, recent amendments in GST. 2017 July onwards, we have been seeing that continuously some updates are happening here and there. Today's session, which I have planned, we are going to touch upon the changes which have happened from 1st January 2018 till March. Yesterday also there was one circular which I have not touched upon. To the extent possible, these changes which are brought in the law by way of central tax notifications 11, central tax rate 9 notifications and circulars 9 plus which have released. Parallelly, there were integrated tax amendments also which are more similar. I have not touched upon, leaving the one odd element. To start with, first amendment which happened by way of notification 1 of 2018 under central tax. This notification has given a clarity with respect to the composition levy, rate of tax applicable for composition dealers. If you look at the table, they have given two particular people who are operating under composition scheme. One person who is a manufacturer. Then they have given something called person other suppliers. So as a person in a composition, I am allowed to do an activity of manufacturing other than the restricted 2-3 set of categories. I am permitted to do a training activity. I am permitted to do an activity as per Schedule 2, Entry 5. Now, with respect to this entry, what was there earlier, they have said if you are a manufacturer registered in a composition, you are supposed to pay 1% of the turnover in state in case of a manufacturer. This is what they are saying. What they have said in this particular notification, whatever rate of 1% is there, that was cut down to 0.5%. 0.5% of the turnover in state in case of a manufacturer. Looks simple that 1% what was existing, they have made 0.5%. When you go to the entry number 2, they say 0.5% of the turnover in the state in case of other suppliers. This 0.5%, they have given little clarity stating that 0.5% of the turnover of taxable supply of goods. So what they have said earlier, there was an entry which reads as 0.5% of the turnover in state. When I say 0.5% of the turnover, my turnover may include taxable supplies, exempt supplies. If I have an activity which is exempted by way of interest income taxable but exempted by way of a notification under 12 of 2017. So if at all, if I am having an activity which is exempted, even on that I am supposed to pay GST under composition scheme. So with respect to this, they have given a clarification that 0.5% of the turnover of taxable supply of goods in the state. So if at all, if you are a trader dealing with the goods and those goods happens to be taxable, only on that particular portion you pay your tax called composition tax. Looks simple, looks clear, but there was an anomaly why this particular clarification was brought in. As a composition person, as a registered person, if I am under composition, I am having a turnover which is taxable. I am having a turnover which is exempted. I am not permitted to have a turnover. Which is not leviable to GST. If I am having a turnover which is not leviable to GST, for be continued under composition scheme. So I can have a turnover taxable, I can also have a turnover which is exempted by way of a exemption notification. That is what the clarity existing. Now when we are talking about manufacture, they have used a language called 1% of the turnover in state. When I refer to the definition called turnover in state, it includes all the turnover, that is your taxable and exempted turnover. So should I need to pay tax on 1% of my exempted turnover also? That was an ambiguity which continues even after this amendment. Only thing, they have said 0.5%. Now, further clarity is required with respect to this entry. How do you identify yourself as a manufacturer? How do you identify yourself as not a manufacturer? Take an example. I'm into printing booklets. I get the content, I use my own material, I use my own stationery, I get the books printed, I do the binding activity and I sell those books in the open market. When I am doing an activity of printing which happens to be manufactured, which satisfies the definition of a manufacturer, that is one aspect which I am dealing with. In addition to manufacturing activity, I have an activity of trading. I buy and sell some stationery items. So if at all, if I am having a turnover, which is from manufacturing activity, which is also from trading activity, will I be called as a manufacturer, or will I be called as a trader, or will I be called as a manufacturer come trader? When they are talking about your point number 1 in the table, turnover in the state. So I am a manufacturer, I am a trader. Basis of calling myself as a manufacturer only to the extent of 80% of turnover, 60% of the turnover. What is the weightage? How do I classify myself as a manufacturer? How do I classify myself as a person of supply of other items? This is one ambiguity which was existing, which happens to be continuing even under this, after this amendment. Now, second point with respect to 0.5% of the turnover in state in case of other supplies. This has given a relaxation with respect to a person who is not a manufacturer. If I am not a manufacturer, if I am in a composition scheme other than the hotel, restaurant, etc., as per Schedule 2, I am supposed to pay a composition tax of 0.5%. Now, things look good till here. They have used a language called turnover of taxable supply of goods. If I am making a supply, and if these goods happen to be non-taxable supply, definitely I cannot get into composition, because section 10, if we refer to, I cannot have a turnover which is not subjected to GST levy. I have a turnover which is taxable but exempted by way of exemption notification. Still, should I pay GST 0.5% on that exempted turnover? Example, when we are talking about your interest income, part of my business, I can have fixed deposits, I can have loans and advances. If I draw interest income, that forms part of my turnover. So as a composition dealer, if I am a retailer, if I have to calculate my turnover for the purpose of payment of GST, should I need to include that or should I need to exclude that? A clarification is drawn by virtue of definitions. Definition under section 2 with respect to exempted turnover or exempt supply. When I look into exempt supply includes a supply which is exempted by virtue of section 11. So if at all, if I have an interest income, that is taxable, but it was exempted by virtue of section 11. Since they have used a language called taxable supply, only those supply where GST is applicable, where exemption is not applicable, I have to go with that particular turnover. So if I look into my profit and loss account, if I look into my turnover for the purpose of computation of composition tax which I have to pay, look at the turnover. I am not okay with the manufacturer other than manufacturer. Look at the turnover which is subjected to GST, where there is no exemption notification. Only on that particular turnover I am supposed to pay 0.5% GST. Otherwise it is not required to be paid. Relevant points with respect to this composition aspect. Though thorough understanding of manufacturing definition is very much required. The definition what we had under central excise, the definition what we have under GST, we have to draw a line to understand. Under central excise, we had this deeming manufacture aspect. Deeming manufacture, the activity of packing, unpacking, labeling, relabeling, putting into a unit container. These are all deemed to be a manufacturing activity under central excise. That particular analogy is not applicable with respect to my manufacturing activity under GST. So we have to go in principle with my definition under section 2, so 72, to understand what calls for satisfying me into the manufacturing activity. Mere doing an activity under central excise which is deemed to be manufactured is not sufficient under GST law. With respect to this change, 1%, half percent of the turnover for other supplies, there is a reduction of my tax offer because I'm paying 0.5% on all the turnover. Now I'm paying 0.5% only on the turnover of goods which is taxable. So to that extent, I'm saving my cash outflow. And this particular amendment, this is effective from 1st January 2018 alone. Next, I draw your attention to Circular 33 of 2018. This circular has come somewhere in February and last week of February. If you recollect, 2013 under Central Excise Law, there was one circular which we famously call as Draconian Circular, where if you have gone for an appeal and your case is pending at any appellate authority, if there was no stay order permitted within a period of 365 days, this circular says that go and attach the property to recover the tax due which is under litigation, which happened in 2013. Government has achieved nothing by way of that particular circular which was introduced in the year 2013 because majority of the court said that circular has gone beyond the authority which was vested in its hand. The same way under GST, this particular circular is going to become a nightmare for the people where litigation was existing under earlier law with respect to CELVAT credit. What does this particular circular say? First aspect they touch upon non-utilization of the disputed credit carry forward. Non-utilization of the disputed credit carry forward. Assuming I am under the service tax era, I have taken CELVAT credit on a couple of items where there was an audit conducted and the audit party said to extent of some amount of rupees, there was a dispute with respect to eligibility of CELVAT credit. The assessee has gone for litigation saying that I don't agree with the audit party, rather whatever CELVAT credit I have taken, it is eligible, referring to a couple of case laws which are existing at tribunal or at several courts. Department goes for contention that no, this particular element of input tax credit you are not entitled for. So we have a forum. First we go for additional commissioner, assistant commissioner, joint commissioner. From there again we go to the commissioner appeals. From there we go to the tribunal, etc. This particular circular says, look, as on 30th June, there was a show cause notice issued under Rule 14 of CELVAT Credit Rules 2014. This particular show cause notice was issued with respect to ineligibility of input tax credit under CELVAT Credit Rules 2004. If at all, if the input tax credit is under dispute, where concerned adjudicating authority, maybe at assistant commissioner level, maybe at commissioner level, maybe at tribunal level, this is pending for adjudication. What they say, it was held that CELVAT credit is not admissible. As per the adjudication process, department says you are not entitled for input tax credit. As an assessee, I say no, we are eligible for this input tax credit because there are case laws which was existing in favor of the assessee. A classic example on input tax credit on canteen service, input tax credit on insurance of employees, where there is a mandatory as per the company, Industrial Factories Act, etc. Where there are disputes which were input tax credits which are disputed, but the assessee has a strong feeling that it is going to be in favor of the company. Those credits they are talking which were not settled as on 30th June 2017. Such CELVAT rate credited to the electronic credit ledger as per section 140, 1, 2, 3, 4, 5, 6 or 8. Section 140 of GST Act talks with your transitional credit. How I can take my existing credits to GST era. Assuming I have filed my service tax return. While filing my service tax return, there was input tax credit to the extent of 25 lakhs, where there was a dispute happening. Example, classic example, renting of immobile property. A factory which is situated somewhere in, say, Narsapura. This factory has got expats who visit on a monthly basis for some technical services. It is not feasible for the company to provide accommodation for those expats in the industrial area located say 100 kilometers away from the city. These expats stay in the city in a rented accommodation called hotel. Now these expats, maybe for technical purpose, maybe for quality purpose, they keep visiting from the foreign nation. When I pay hotel accommodation for those expats, I have to pay service tax. I say this service tax which I have paid for the renting of immobile property for these expats, this is essential for my manufacturing activity because those expats are visited for the purpose of my factory. Do you have an excess? Yes, the person who has come from foreign nation is a quality engineer who happens to be a quality head. He comes once in a 6 months, once in a 12 months to ensure that quality of the product is intact. How can you say that immobile property is not in relation to the manufacturing activity? That would be the argument put forth by the assessee. Assuming this particular argument has a settlement element of 20 lakhs. So what they say, this 20 lakhs I would have taken input tax credit. The moment I have taken input tax credit, I have to show in my service tax return called ST3 or ER1 which I am filing. The moment I have taken input tax credit, it is going to sit in my ER1 return or ST3 return. When there is a dispute, as an assessee, I will choose to utilize that input tax credit or not to utilize the input tax credit. There was a tricky aspect which was there under excise rules and the service tax rules. Standby credit wrongly availed but not utilized. Standby credit availed and utilized. When we refer to the interest provisions under excise law which was existing prior to migration to GST, they say if there was a standby credit availed but not utilized, there is no levy of, there is no applicability of interest provision. So what these assessors used to do, whenever there is a dispute, I used to retain the portion of dispute of that 20 lakhs in my original return ER1 or ST3 as it is. I am not going to utilize that. The moment I utilize, I know if the decision is going to be against me, I have to pay interest on that particular disputed credit. So safely I used to carry forward that particular amount of 20 lakhs in my returns. When I have come to the month of June, where I have to file my service tax return or ER1, I would have a closing balance of 20 lakhs as per section 140, your transition provision. Whatever return you have filed as on 30th June, pertaining to the June month, there is a closing balance of 20 lakhs. I have choice 1 to carry forward to GST era. Choice 2, ignore that 20 lakhs at that point of time. If I ignore, I will not be permitted to claim a refund for that. Why will someone give a refund for that particular input tax? So what will I do? I will choose to carry forward that particular disputed credit to GST era. The moment I carry forward, it comes and sits in my electronic credit ledger. What does this circular say? Shall not be utilized by the registered person till order in original or order in appeal adjudication is in existence. They have put a hurdle on the assessee by way of this circular stating that, look, if at all if there was a disputed credit, if there was a disputed credit under earlier law and you have carried forward that to your GST transitioning credit under any of these sections 140, 1 to 6 or 1 to 8, you are not supposed to utilize that particular input tax credit. This is what this particular circular says. If you look at any of the provisions under GST, there was no restriction with respect to transitioning credit which I have carried forward. They are putting a hurdle by way of a circular saying that if at all any of these credits exist which was under dispute, you are not supposed to utilize that particular input tax credit till the adjudication process in existence. What they say, they are given directions under 168 of GST Act. They are given directions in this circular as per section 168 for what? If for non-utilization of the disputed credit carry forward. First of all, this 168 doesn't have an authority to stop the input tax credit which are carried forward under 140. If there is a restriction to be casted, section 140 should have authority to the officer concerned, saying that, look, if at all there was an input tax credit which you are taking to GST era and which was under dispute, you are not supposed to utilize that particular credit until the case attains the finality. When there is no power vested under section 140, they cannot bring in section 168 saying that that particular credit which was availed but not utilized should not be utilized under GST era. Further, what they say, non-utilization of the dispute credit carry forward during the period last order in original or order in appeal is in existence. If the disputed credit is utilized under this Act, it shall be recovered from the taxpayer with interest and penalty as per provisions of the Act. if at all, this disputed credit where an appeal was pending, I've utilized that input tax credit, under GST for what? For payment of my output GST. This particular circular says that go and recover that particular tax portion, along with the tax, recover interest and penalty, which is unlawful, where authority was given to a circular which was not existing at all. So this was a case which was very similar to 2013, where we had this particular draconian circular to recover the pending disputes where the stay order was not sanctioned, or if the stay order was sanctioned within 365 days your case was not adjudicated, whatever pending dispute is there, that should be recovered along with tax, interest and the penalty. The same situation was brought in by way of this particular circular. Also, if you refer to this particular provision, there was a reference to section 35 of Central Excise Act. When we go for an appeal under earlier Central Excise Act, they used to say pay pre-deposit 7.5% or 10% of the amount under dispute, and you can go for an appeal. Nowhere under section 35 of Central Excise Act says that when you are going for an appeal, the amount which is involved under the dispute shall not be permitted for utilization. Nowhere there is a restriction. The undue restriction was caused under GST era by insertion of this circular, again referring to a renewal credit which was under earlier era. So this is one hardship which was being brought in by the circular. What they further say, non-transition of block credits. In addition to the credits which were under dispute, they were referring to credits which were blocked under not GST era, blocked under Selvat credit era. They were referring to a registered person shall not avail and input tax credit under 141(1) in electronic credit ledger. Selvat credit is attributable to telecommunication towers or pipelines laid outside the factory premises. So if at all if you have taken input tax credit in relation to this telecom towers or pipelines which were laid outside the factory premises, you are not permitted to take the input tax credit under Selvat credit rules. If at all if you have taken Selvat credit under that particular era, that is something which you are migrating to GST era under section 140. That is also something which is a block credit. You are not permitted to take the input tax credit. If the same block credit is carried forward and utilized under this act, recovery along with interest and penalty as per the provisions of this act. So they are referring to this circular saying that there are two elements. First element with respect to disputed credits. Second with respect to block credits. So if you are having any of these two credits, you are barred from utilization under GST era. This is what they are trying to draw on by way of a circular. Clear? Next, we go to notification 3 of 2018. This notification has brought amendment to Rule 3A. Under Rule 3A, I am supposed to furnish a statement called IT603. When I have to file IT603, what is IT603? This is a statement. Statement for what? Reversal of input tax credit. Input tax credit on what? Input tax credit on inputs in semi-finished form or finished goods or capital goods. A reference is drawn to section 18, subsection 4. What they are saying, look, if at all you are registered as a regular assessee and you are opting for composition, whatever input tax credit which was existing in your closing stock, that particular input tax credit you are supposed to reverse. How should I reverse? By filing this form called ITC03. This ITC03, they have given initially a time period of 90 days. They have extended this period of 90 days to 180 days. Just mere procedural amendment. Next, provision omitted in Rule 20. Earlier, when we refer to this registration process, a person who is mandatory to be registered under Section 22, they have to register. I have something called voluntary registration also. What voluntary? I am not supposed to get registered because of the threshold limit. I don't have a turnover crossing 20 lakhs. I need not get registered under Section 22. But still, I will get voluntarily registered under GST law. When I get registered under GST law, there was a provision saying that cancellation of your registration is not permissible till a period of 1 year from the date of registration granted. So this particular hurdle of 1 year was withdrawn, omitted, which was existing in your Rule 20. So with this particular amendment, what they say, if at all if you have taken voluntary registration, you have a permission to cancel your registration even before 1 year of the date. Then, Insertion of explanation in Rule 43. This explanation is also applicable for Rule 42. This is one major change which was expected way back in July itself, but nevertheless they have made this amendment in January. Rule 42, Rule 43. When we refer to Rule 42 and Rule 43, this talks about this draws your working to Section 17. Section 16 talks about your input tax credit. Section 17 talks about your block credits or credits which are not permitted under GST law. So, with respect to Section 17, where there is a block credits, why there is a block credits? You may have a turnover which is taxable, you may also have a turnover which is exempted. So, to the extent of input tax credit which is pertaining to your exempted turnover, you are not permitted to take the input tax credit. That particular change was brought in under Rule 42 and 43. Rule 42 talks about reversal of input tax credit on input services. Rule 43 talks about reversal of input tax credit on capital goods. How does it work? Let's take an example to understand. Assuming I am a manufacturer. Part of my manufacturing activity, I have a supplies which I make to DRDO, defense organizations, or maybe to ISRO. Part of my activity, I do manufacturing activity which I clear on payment of GST. I make a clearance of goods under Section 11 where there is a exemption provided for clearances. Notification 11 of 2017. 60% of my turnover is cleared on payment of GST. 40% of turnover is cleared to my DRDO or ISRO related activities. So when I look at my turnover, I have a turnover which is taxable, I have a turnover which is exempted. When I look on the other side called input service, I have an input service on inputs and input services, in addition capital goods, which are commonly used for taxable activity, commonly used for my exempted activity. Take example, security service. Security is common for my manufacturing activity, irrespective of exempted or taxable. Security is a service where input tax credit is a common service. Take another example, plant and machinery. I may use a machinery which is used for taxable activity. I may also use this machinery for exempted related activity. So to deal with this particular aspect, there was the Section 17 which talks about your block credits. So when you have an activity which is taxable, which is exempted, refer to Rule 42 with respect to calculation of input tax credit, how much I have to reverse in respect of inputs, input services. Same way you refer to Rule 43 which talks about reversal of input tax credit on capital goods. These are the two rules which were existing with reference to your Section 17. Now when I go to Section 17, there is something called a formula with respect to reversal of input tax credit in relation to exempt supply. My exempt supply includes an element called interest income. Take an example. Part of my manufacturing activity, I have to give a performance guarantee to my customer. All projects which I do is a turnkey project where 10% there is a retention money. In addition to that, if I don't want that retention, I have to give a bank guarantee, performance bank guarantee of 10%. All the projects whichever I do, I have a bank guarantee where I have to give a fixed deposit to the banker. Whenever I have fixed deposit with the bank, I draw income by way of interest income. When I look at my turnover, for the purpose of turnover, they say, look at your turnover which is subject to GST, look at the turnover which is also not subjected to GST. Interest income comes and sits in your profit and loss account as an indirect income. I have to consider that indirect income also for the purpose of reversal of my input tax credit. Example, we are talking about security service. If I have drawn security service, the input tax credit pertaining to the security service, I have to reverse to the extent of exempt income by way of interest drawn. This is very undue hardship faced by the registered person. Interest is something, fixed deposit is something which is common in my business. Without those deposits, my business does not function. And to my unluck, there is a notification called 12 of 2017 which says interest income is taxable but exempted by virtue of this notification. When government has exempted that particular turnover, why should I reverse my input tax credit which is pertaining to my interest income? So there are few common services, few inputs or capital goods which were supposed to reverse, you have to reverse the input tax credit by virtue of Rule 42 and 43. What they have done, they have inserted an explanation in Rule 43 saying that this explanation also is applicable for Rule 42. What they have said, while calculating your input tax reversal from the income which is exempt supply, exclude these three portions. All the way you are including. Going forward, you exclude these three portions. What they say, first is services exported to Nepal and Bhutan by way of notification 42 of 2017. When I export services to Nepal and Bhutan, it is not mandated that I get my receipts in foreign currency. I may get in foreign currency, I may get in INR. Now Nepal and Bhutan, though it is virtually going out of India, why should I be deprived? Why should I be deprived saying that this is an exempted activity and my input tax credit which I have used in relation to these services should be denied? Government felt yes, there is a sense, logical sense with respect to this interpretation that any services which are exported to Nepal and Bhutan where consideration is received in INR, don't call that as an exempted activity, you consider that as a taxable activity, no need to reverse input tax credit with respect to this turnover. Second, the value of services of accepting deposit, loans, etc., where the consideration is drawn by way of interest income. Secondly, they say, if at all if there is an interest income which is part of your business, don't consider this forming part of your exempted activity. I was referring to a manufacturer who gives a performance bank guarantee and he draws an interest income. Assuming I have only manufacturing turnover and I draw a minimal interest income, I was supposed to reverse my input tax credit because of my interest income drawn. By virtue of this insertion, they say, don't worry, whatever interest income is there, that is not to be considered for the purpose of exempt supply. So reversal of input tax credit on account of my interest income is not required. Third, value of services of transportation of goods by vessel. This particular entry says, if at all you are doing a transportation of goods by what? By vessel. From where? From a customs port in India to a place outside India. If I have an activity where I do a transportation of goods by a vessel. So if I draw as a shipper, I draw income by way of transportation of goods. I also have other activity clearing the goods into India as a CHA or some other documentation process which I also deal with part of my business. This particular entry says, look, you are a supplier. Supplier for what? Transportation of goods. If you transport goods from the customs port till a place outside India, that particular revenue which you are earning, the supply which you are generating, that supply should not be considered for the purpose of exempt supply. This is what a clarification given by way of a explanation inserted in Rule 43. By inserting, they have brought in the entry for transportation of goods by vessel. Transportation of goods by air, that was kept out. So these three are the elements which were brought in as an explanation to Rule 43. Clear? Any doubts till now? Next. Same notification, there was an insertion of sub-rule 1A in Rule 54. This Rule 54 talks about issuance of a tax invoice in special circumstances. What is that special circumstance? With respect to transfer of credit by way of ISD, Input Service Distributor. There was one anomaly which was crept into the rules where they have not considered the aspect of one entity, one virtual entity to, one vertical to another vertical. As per GST law, when I talk about my registration, within the same state, I am permitted to have multiple verticals where I can take multiple registrations for multiple verticals. So when I have to distribute the common credits, whether can I distribute the credits from one vertical in the state of Karnataka to another vertical in the state of Karnataka, the earlier entry under Rule 54 has no reference to that particular entry. That has only reference to one state to another state. When I want to transfer the input tax credit, this particular Rule 54 was talking about the transfer of credit from one state to another state. It was not talking about the transfer of credits within the state from one vertical to another vertical. This particular anomaly they have cleared by way of insertion of this sub-rule 1A. Then they have inserted a new rule called 55A. This is after your e-way bill has come into picture. This 55A says a person in charge of a conveyance has to carry a bill of supply or a tax invoice issued as per Rule 46, 46A, 49. This Rule 55A was brought parallelly with the insertion of your e-way bill concept. A lot of anomaly was there, why this 55A was brought in and how they have brought in this 55A. To understand this rule, we need to understand our Rule 139, which talks about your e-way bill. Lot of deliberations happened, lot of discussions happened. Probably you also have gone through the updates with respect to e-way bill generation. When we look into e-way bill, they say a person who causes movement of goods, the value of such goods, if it is more than 50,000, e-way bill is compulsory. This is what my rule 139 talks about e-way bill. When I read that e-way bill, there was a restriction to the extent of 50,000. What will happen if my goods value is less than 50,000? Am I mandated to generate e-way bill? If my goods value is less than 50,000, am I mandated to generate e-way bill? Not required. Because it is not required, I am not generating e-way bill. Can you cause the movement of goods? Yes, I am permitted to cause the movement of goods. This rule says when you are causing movement of goods where e-way bill is not required as per 139, at least you carry a document called bill of supply or tax invoice. This is the language used in this particular entry. Prescribes person in charge of a conveyance to carry a bill of supply or a tax invoice issued under 46, 46A, 49. Let's take an example. Part of my manufacturing process, I have to cause movement of goods for job work. Say job work called blackening or job work called some polishing or painting work. When I am causing movement of goods from my factory in Peenya to Dobaspet, where I am causing the movement of goods for job work. Activity of job work is blackening. Value of goods less than 50,000. Clear? When it is less than 50,000, do I need to issue e-way bill? Not required.
No, for job work there is exception.
Rule 55A doesn't talk about, sir, there is an exception. When I look into Rule 55A, I'll come to that. For job work, there is no need to carry your e-way bill. Now, what document I use? I cannot use a tax invoice because it is meant for job work. Can I use a delivery challan? Yes, I can use a delivery challan. Can I use a bill of supply? It is not a composition activity, I don't use my bill of supply. When I read my Rule 55A, it says the person in charge of a conveyance to carry a bill of supply or a tax invoice. That's all. They have not given reference to a delivery challan. In absence of a delivery challan, I cannot issue a tax invoice. I cannot issue a bill of supply. Just because my rule says I have to issue any of these two. They should have said tax invoice, a bill of supply or a delivery challan. That language is something which was missing while introducing your Rule 55A. So this is something where there is a small dichotomy which needs to correction with reference to what document has to be used where there is no e-way bill is mandatory as per Rule 139. So this is your Rule 55A with respect to movement of goods. Clear? Next, there is a rule called 89. This Rule 89 talks about your refund of GST. In this Rule 89, there was a sub-rule called 4A, sub-rule called 4B, which was given more clarity by way of this particular insertion. To explain in general, this sub-rule 4A, 4B talks about exceptions like supplies on account of deemed exports, supplies on account of merchant exports. When GST law was launched, this deemed exports was not existing. Under central excise, we had this concept called deemed exports. When I make a supply to EOU, was considered as a deemed export. But GST law, till somewhere September, October, this deemed exports causing movement of goods to EOU was not at all defined anywhere called the deemed exports. Same way, merchant exports. Earlier we had this merchant exports under VAT law, which was not existing under GST law. Again, that was brought in with they saying that 0.1%, at a very nominal amount tax rate should be applied in case of a merchant exports. So this Rule 4A says, look, you are a supplier, you are causing movement of goods as per notification 48 of 2017. This notification refers to supplies made on account of deemed exports. When I look into this entry 48 of 2017, it gives 4 situations. Situation 1, where you are causing movement of goods on account of advance authorization, or option number 2, EPCG. Option number 3, with respect to EOU units. Option number 4, with respect to some customs notification where you are eligible to be called as a deemed export, supplier of deemed exports. In case if you are causing the movements of goods on account of deemed exports, refund with respect to that particular supply shall be dealt separately, not with the regular turnover. Whatever input tax accumulation is there, that shall be dealt separately under 89, read with 4A separately. So they have given 4A and 4B where they have said what is the mechanism for the purpose of claiming of input tax credit. Yes. 4B, which talks about supplier who has availed the benefit of 40 of 2070, which is a merchant exports, 41 under integrated tax, again merchant exports, 78, 79 which talks about your import of goods under customs notification. If at all you are procuring goods under any of these notifications, you have paid very minimal tax or you have not paid tax at all. So you don't claim input tax refund with respect to this turnover, claim the input tax other than the turnover which was existing for IGST paid on goods or services exported. Rule 96, this is again dealing with your refund of IGST paid on export of goods or services. In that there was a sub-rule 9 which was inserted which says IGST paid on services exported shall be filed in form GST RMT 01. This is one insertion which was very badly needed with respect to refund of input tax credit or refund of IGST paid on services. When we saw this jurisdiction, SSCs were brought under the state jurisdiction, few SSCs were brought under central jurisdiction. When I cause movement of goods for export, I have to claim a refund. Now when I am dealing with exports are dealt with customs. Now should the central tax officer deal with that or should the state tax officer should deal with that? We had something called section 54, 55 which talks about your refund. So there was a dichotomy with respect to this exports. Who should be the authorized officer who can sanction your refund application? Should I go to the state officer or should I go to central officer? Assuming my turnover is less than 1 crore and I was under state jurisdiction. If I cause movement of goods for export and if I want to claim a refund, should I go to the state officer or should I go to the central officer? There was one dichotomy with respect to this jurisdiction issue which was clarified by way of a insertion of sub-rule 9. How? We will see in a couple of slides later. Timely, what they say under sub-rule 9, if you want to claim IGST paid on services exported, that shall be filled in a form called RFD 01. How is this dealt? We will see a couple of slides later. Then sub-rule 10 in the same sub-rule in the rule 96, they say, look, you are a person claiming refund of IGST paid on export of goods and services. You should not have supplies received from any of the below people. You should not have a supplier who has taken the benefit of deemed export. You should not have a supplier who has enjoyed the merchant export rule. What this rule says, sub-rule says, when you are claiming a refund, you should have subjected to GST at the time of procurement. When you are not paying GST at the time of procurement, why should I allow you for the time when you are making a supply called outward supply? So they are restricting your tax paid on IGST paid on export of goods and services, if at all, if you have suppliers who are falling into any of these categories. So basically, they are trying to say if you have a supplier who is having a merchant export benefit, you are having a supplier who is having a deemed export benefit, take out that particular turnover, you are not entitling for that particular refund. Next, rule 138, which was existing earlier, they have made few alterations to rule 138, which was there earlier. The present version much simplified compared to the older version. Just to recap what was there in our rule 138, it says every registered person who caused movement of goods having a consignment value more than 50,000. So if at all, if I am causing movement of goods, I may be a supplier, I may be a recipient. So when a movement of goods is caused whose value is more than 50,000, e-way bill is compulsory. Exception, principal causing movement, handicraft goods. What they say, if at all a principal located in one state causes a movement of goods from one job worker location to another job worker, that movement shall be caused by way of e-way bill generation only by the principal. Next, with respect to handicraft goods, there was an exemption given with respect to handicraft goods. There was no registration required under section 22 for dealing with your handicraft goods. However, this particular rule 138 says that, look, if you are a person dealing with handicraft goods, you are not supposed to require to register under GST law. You are supposed to generate e-way bill using your PAN. This is one exception which they have brought under rule 138. So these are the only two exceptions where the person who has to cause movement of goods and the person who has to generate e-way bill has been defined. Next, with respect to facility of generation of e-way bill by transporter. They have also enabled the transporter, either a supplier or recipient can generate e-way bill. If required, instead of these two parties, a transporter also can generate an e-way bill. Movement of goods within 10 kilometers radius for further transportation, they say e-way bill is not required. There was a misconception with respect to this entry. What they say, if the transportation or if the movement of goods is within 10 kilometer radius, though value of goods is more than 50,000, e-way bill is not required. The provision says that, look, if the supplier is causing the movement of goods, from supplier's premises, the goods are taken to the transporter, warehouse or transporter depot, where from there it goes further to the recipient place. Example, say Gatti. When they go to pick the material, they go to all factories which are located in Pina industrial area. The truck which goes to the factory may not be the same truck which goes for delivery to the customer. What they do, they pull all the material at their warehouse or a location. From there, they distribute the material into various vehicles for further movement of goods. This particular provision says that if a transport is causing movement of goods from the supplier's premises to a place, from where further movement is to be caused, only in that scenario up to 10 kilometer radius, e-way bill is not required. If further movement of goods is not going to happen, it is mandatory that e-way bill is required. So this is one exception which should be read properly, that within 10 kilometers radius, e-way bill is also required. Only exception is for further movement of goods only by the transporter, e-way bill is not required. Transfer of goods from one conveyance to another, they say if at all, if there is a transfer of goods from one vehicle to another vehicle, before such transfer you update your e-way bill, then you cause your movement. Availability of information to the registered person for filing GST or 1. Now this is one aspect. People are having knowledge of VAT regime. They would be having knowledge how e-Sugam was being used by the assessing authority for the purpose of assessment. Under VAT regime, the movement of goods by way of inward supply or sales outward supply, we used to have a e-way bill, so e-Sugam generated. So at the time of assessment, this particular officer used to generate a report from their VAT portal called e-Sugam report. What was the turnover you have declared in your VAT return? What was the turnover which was declared in your e-Sugam? They used to compare both the things. If at all the turnover declared in e-Sugam is higher than the turnover declared in your VAT 100, the differential portion of that was being subjected to assessment as tax not paid. The same concept was being adopted to GST also, saying that if at all, if an e-way bill is generated, carefully examine your e-way bill. E-way bill may be generated by supplier, e-way bill may be generated by the recipient. Whoever is causing the e-way bill, look carefully. If the e-way bill is pertaining to you, accept that. If e-way bill is not pertaining to you, you reject that particular e-way bill. Because if an e-way bill is used using your authorized ID or on account of your GST number, and if it is not pertaining to you, if you have not rejected that particular e-way bill, you are bound to explain for that movement of goods. Again, movement of goods may happen by way of issuance of invoice or by way of a delivery challan for whatever purpose it is. So you are accountable for all the e-way bills generated using your ID. That is one factor which we have to understand in the GST era. People are dealing with central excise. This is something which they would have come across using your VAT era. Cancellation of e-way bill, they say within 24 hours you can cancel the e-way bill. Exception they said is if the proper officer has verified your e-way bill, you don't have a right to cancel your e-way bill. The e-way bill which was communicated, now as I say, e-way bill can be generated by a supplier or by a recipient. If it all, as a supplier, you have not generated the e-way bill. Recipient has generated the e-way bill, which comes and sits in your portal. If you don't cancel that e-way bill within 72 hours, it is deemed that you have caused the movement of such goods. List of goods where there is an exception, e-way bill is not required. They are referred to entry under sub-rule 14 of Rule 138. In addition to that, they say all the goods which are exempted, by virtue of notification 2 of 2017, except the de-oil cake, no need to carry e-way bill. This is a list of important points with respect to our e-way bill. Now, before we proceed further, there are a couple of issues which are not properly addressed, may cause litigation. I am not saying that it shall, may cause a litigation because there is an ambiguity with respect to the e-way bill generation. Take an example. They have used a language called for movement of goods. E-way bill is compulsory for movement of goods whose value is more than 50,000. If I have, as a factory, I have a truck. The value of truck is more than say 5 lakhs. I use this truck for the purpose of transportation of goods, for the purpose of carrying my raw material, for the purpose of delivering my finished goods. Now this truck along with the goods is also traveling. Can't we say the movement of truck is also going to be a movement of goods? Anyway, the material which is there in the truck has generated e-way bill. The truck which is moving is also a movement of goods. Same way, when we talk about our own profession, we have our own four-wheeler app, we have our own laptop, etc., which is having a value more than 50,000. Movement of goods from one place to another, maybe on account of supply, maybe not on account of supply, is also movement of goods. Can that also be called for generation of e-way bill? These are a couple of questions which are being roaming around with respect to e-way bill generation. As per the intent of the law, this does not call for generation of e-way bill, where a clarity should be provided before e-way bill provisions become mandatory. As we understand, 1st February was the cutoff date where e-way bill was supposed to be used mandatorily. But what they have said, from 2nd February, because the e-way bill portal was not ready, they have deferred the mandatory movement of utilization of e-way bill. However, this council said, on or before June, all the states should make it a mandate that e-way bill should be used within the state or for intra-state or interstate movement of goods. Next, after e-way bill, we move on to notification 8 of 2018. This notification 8 of 2018 deals with your extension of date, extension of due date for filing your GST 6. GST 6 deals with my IST return. Fund of input service distributor, not so easy, what we have understood under service tax law. There is a little more silver lining to IST concept, what we have to apply under GST law. For effective tax planning, IST is one route which should have been wisely utilized. Take an example. Say I have a manufacturing unit. I have a presence across 4 states in South India. As a part of my manufacturing activity, my sales and marketing team visits to the customer premises for the purpose of trial purpose or test purpose, and they have to stay at the customer premises. When my technical engineer from Bangalore travels to Andhra Pradesh, he has to stay in a hotel for the purpose of 2 or 3 days to meet the customer requirement. So when I stay in a hotel over there, I would have paid the GST for the hotel accommodation. Can I take the input tax credit on the hotel accommodation? Is that restricted or permitted? Input tax credit on hotel accommodation? Not permitted. Input tax credit on vehicle, motor cab? Restricted or eligible?
The place of supply is in the other state.
Place of supply, assuming I have a branch over there. I have a branch, I have presence in 4 branches. So input tax with respect to hotel I can take, there is no restriction on that. Now, my technical engineer from Bangalore travels to Andhra. There is a customer in Andhra. In Andhra, what do I have? I have a trading point. I don't have a manufacturing unit. Manufacturing unit exists in Karnataka, Bangalore alone. In Andhra, I have a trading point where I supply the goods to my customer. Because of my performance related issue or some technical issue, the technical engineer travels to Andhra Pradesh. GST paid on hotel accommodation, I can avail. It is not under restricted clause as per section 17. So when I take the input tax credit, where can I take? I can take only in Andhra Pradesh, because hotel fellow is going to charge SGST, CGST of Andhra Pradesh. He cannot charge IGST. Now when I pay SGST, CGST, if I take the input tax credit in the state of Andhra Pradesh, the officer is going to question, how is that hotel accommodation connected with your business? The technical engineer who is staying there is not employee of Andhra Pradesh unit, he is an employee of Bangalore unit. Why should you take the input tax credit? If I say it is input tax credit not pertaining to my unit, so whose unit is that? Pertaining to my Karnataka unit. I can transfer that particular input tax credit very well, because it is a tax eligible for my business purpose. How will I transfer? Using my IST route. How do I do that? I take an IST registration in the state of Andhra Pradesh. I take the input tax credit, pass on that credit to the state of Karnataka. Now, Under service tax law, IST, we used to have one place where I used to take IST registration. Assuming across India, 8 places I have taken registration, I can have IST registration at head office or a particular location. But GST law, there was no restriction as such. You can take the IST registration at whichever point you want to avail. Now, with respect to IST, when we are doing a migration from earlier law to present law, at the time of migration, there was one option called why you are migrating, either for the purpose of IST, as a supplier of goods, as a supplier of service. Most of us, what we have done, we have said supplier of goods, supplier of service, and did the migration. If you look at the IST, in the present registration, there is no IST option available. For done the migration without choosing IST option. So what should I do? I have to make a fresh application for IST. So as IST, I will be having a separate registration. That is what dealt with respect to this amendment. What they say, look, the due date for filing of returns under IST, which happens to be a monthly basis, you can file returns pertaining to July 2017 till February 2018. The last date for filing is 31st March 2018. Why was such a long time given? Pertaining to July till 31st March, they have given the due date. Something like our GST 3B, GST 1, where technical issues are there. IST, when we look at the transfer of credits, they refer to the credit distribution on the basis of pro rata. There is a formula. We have to refer to section 20, which says how my common credits can be distributed. To distribute my common credits, I have to calculate the turnover of each state for the registration which I have obtained. Earlier, probably we may not have been excise registration, service tax registration across all the states from where we are operating. Assuming I am a service operator, as a service fellow, I can take one registration and I can operate across India. But under GST law, when I am having a setup at each and every separate state, I will be forced to take a registration at each and every state for procurement of goods and for rendering of services. When I have services which have to be distributed, new units have come up under GST era which were not existing under earlier law. For the purpose of distribution of the credits, they have given a formula called aggregate turnover. How do you calculate aggregate turnover? Referring to your previous financial year. Now when I refer to previous financial year, I do not have all the units which were operating in the previous financial year. Only units which are registered under excise probably might be existing. For the purpose of my GST, whatever new units which are got registered under the current law were existing only in the current year. So for the purpose of this turnover calculation, what they say, look at the quarter where all the units were functioning. Where all the units are functioning, take the turnover of that quarter prior to a month where you want to transfer the input tax credit. When I am talking about the GST law, assuming 4 units were there under central excise, new 4 units have come under GST era, 4 plus 4, 8. These 4 units have come in a phased manner. July 1 registration, August 1 registration, September 1 registration, October 1 registration. When I want to distribute the input tax credit pertaining to the 3 units which have come in July, August, September, possibility is there that I can transfer based on the turnover which was available for the month of quarter July to September. Because there was a reference of a formula which is done on a quarterly basis, there was a practical issues how to calculate, how to distribute. Moreover, this particular registration and written format was not available till October end. When they said, don't worry, you can do the filing of July also till 31st March 2018. What is important from this particular IST? Identify the common credits, identify the specific credits. When you are operating as a single unit, nothing to worry. When you have multiple units, the worry comes where you have a common credits. Common credits with respect to statutory, common credits with respect to service, software service or any other common services. So if at all you have common services or specific services, do the pass on by using a IST route. Now, instead of using a IST route, can't I raise a regular tax invoice? I was talking an example of hotel accommodation. The hotel fellow in Andhra Pradesh raised a invoice. The hotel fellow will raise an invoice to Bangalore if I give Bangalore address. That fellow will raise an invoice to Andhra Pradesh unit if I give Andhra Pradesh unit address along with Andhra Pradesh registration. Assuming Andhra Pradesh unit raises an invoice pertaining to the hotel bill as IGST to the Karnataka unit, will that be permitted? Will that be accepted? Litigation starts. Well, are you registered as a hotel accommodation service? Answer is no. Am I into this accommodation service? Absolutely no. What am I doing? I am facilitating. For facilitating, are you fitting into that particular category? Have you registered under that particular category? All these are the questions which comes into picture when I go for a regular route of invoicing rather than going for ISD route. So all practical reasons, ISD is one option which should be wisely used for the purpose of distribution of common credits and specific credits. Reimbursement of expenses. You cannot raise an invoice. You will call that is a reimbursement of expense by using a debit note. To call that is reimbursement of invoice, you have to issue a tax invoice. The moment you issue a tax invoice, you have to cause the supply. Are you causing the supply? Supply of portal accommodation, that is what would be tested. There is a couple of factors attached to that which also can be thought of. It is like tax planning, not to do with your tax evasion. Same example. Say when an employee travels from one branch to another branch, definitely the employee who is reporting to the other location, he has to visit the branch for a couple of events, couple of requirements. Say I have a unit in Bangalore, I have a customer who is located in Haryana. Say example, Honda is my customer. One of my technical engineer visits Gurgaon for the purpose of some quality issue which is there in Gurgaon. When my employee visits to Gurgaon, we need to provide hotel accommodation. We need to provide motor vehicle for the moment of for transportation, local transportation. We need to have food facility provided to the employee. Part of that, employee wants to have a discussion, interaction with the customer. The client comes to the office of my Gurgaon branch. He comes to my branch and will have a discussion. I'll be using infrastructure called your internet facility, AC, etc., or the cabin which was available, readily available. All this put together, can we call that as a supply of service from one branch to another branch? Can we pool all the services, add some value addition and bill it back to the other unit? These are certain areas which have to be pondered, how I can use my ISD route, how I can use my regular tax invoice route. We have to carefully exercise the options with respect to passing on the credits from one unit to another unit, which are directly related to other unit. Next, amendment to notification 62 of 2017. This is done. This is what I was referring to, that rule 96, where there was a introduction of RFD 01 with respect to service. What happened when we read the original provision? This particular provision says proper officer appointed under the State Act for the purpose of 54-55. My section 54-55 deals with my refund. A proper officer appointed under the State Act for the purpose of 54 and 55 shall also be a proper officer under CGST for refund except rule 96. So they have given authority to the state officer for processing my refund application. They say subject to rule 96. Rule 96 talks about refund of IGST paid on goods or services. When I have paid IGST on goods or services which are zero rated, how do I claim a refund? I have to file an application. If I am falling under state jurisdiction, will the state officer process my application? Definitely not. Because this particular entry says, I don't have authority, because rule 96 deals with your export of zero rated supply. So definitely my application, though I am under state jurisdiction, I will be forced to go to the central officer. This particular anomaly, they have amended by way of insertion, saying that proper officer under State Act for the purpose of 54 and 55, section 54-55, shall also be a proper officer under CGST Act for refund, except 96(1)(8) and 96(10). What they have said, except rule 96. Earlier it was rule 96. Now they say except rule 96 from 1 to 8 and 10. In between 9. So 9, rule 96 sub rule 9 is an authority which was given to the state officer. When we refer to this rule 96 sub rule 9, which was a new entry which talks about your refund of input tax on services. So IGST paid on services for zero rated supply. So the anomaly with respect to services, they say state officer also empowered. So whatever refund application you have with respect to IGST paid for the services, you can approach your state officer. I'll come back to this amendment little a while. of changes were brought which are very important, very required for the trade operators. First thing, with respect to notification 11 of 2017. Amendment was made by way of a notification 1 of 2018, central tax rate. My notification 11 of 2017 deals with your rate for goods and services. Rate for services. So they have made some changes with respect to central tax rate by way of amendment in 1 of 2018. Entry number 23, support services. This deals with your tour operator service. They have amended this particular entry stating that condition rate for input tax credit in the same line of business was inserted. What they are saying is, if you are acting as a tour operator, your rate of tax shall be 2.5, subject to condition that you are not supposed to take the input tax credit. Now, as a tour operator, if I take the input tax credit from another tour operator, still will I be restricted with the input tax credit? Before this insertion, you are not allowed to take any input tax credit. That particular anomaly, they have corrected, saying that as a tour operator, if you receive the service from another tour operator, you are not barred, you can take the input tax credit, where my rate of tax is going to be 2.5%. Next, entry number 24, which is the support service of agriculture. So, any services by way of fumigation in a warehouse of agriculture produce, there was nil rate of tax which gets attracted. So, with respect to agriculture service, fumigation is one thing which was left out, which they have inserted now. Next, service of exploration mining, not anomaly, not much to deliver. Tailoring service, they have introduced at 2.5%. Sewage and wastage collection, earlier there was one entry, they have split this sewage and waste collection, saying that services by way of ETP was 6%. Services by way of sewage and waste collection, treatment, disposal, other environmental protection services other than 9%. This is one thing which was applicable to the hospital sector, where earlier they were enjoying exemption, now it was subjected to tax. Services by way of treatment of effluents by your common ETP, it was taxable at the rate of 6%. This is a new entry which they have brought in. Next amendment with respect to recreation, cultural, sport. Earlier this was clubbed as one entry. Now they have split this into two entries. Point number 3 talks about services by way of admission to amusement park, including theme park, water park, joyride, merry-go, etc. Rate of tax is at 9%. Earlier, all this was clubbed with the second limb, where rate of tax was 14%. So now, eliminating the entertainment events, all your reality shows or cinematography films, etc., casino, gambling, which was at a higher rate of tax, they have reduced the rate of tax from 28% to 18%, only for the services by way of admission to amusement park. So all those admissions which were subject to 28% was brought under 18% category. Your Wonderla, etc. will be falling under 18%. Next is your notification 12 of 2017, which deals with your exemption for services. Under that, they have made a insertion of subroute entry called 3A, which is next to the pure services. What used to happen? There was an earlier entry called pure services. Pure services, as the name goes, only services are there. There cannot be any goods. As a service provider, if I render service to a state government, central government, or a government authority, in relation to Article 243G, Article 243W, which deals with your municipality and panchayat. The services which are dealt with the municipality and panchayat, where pure services are delivered, the rate of tax was shown as nil. What if I have a supply of services, minimal goods involved? Take example, your street lights. Your street lights functionality is part of your municipal jurisdiction. Any contractor who does the support of street lighting or contract for the municipality, that was subjected to GST. Why? Because there was exception only for pure service. As a part of contract, when I am doing the support of this street lights, I have to maintain the lights. I also have to replace the worn-out parts. When there is an element of goods involved, it is not called as a pure services. They have brought an amendment by way of insertion of 3A, saying that, look, pure services, in addition to that, goods also is permitted when supplied in relation to your municipality or panchayat. Condition, your supply of goods should not be more than 25% of the supply value. Now, this is highly impossible. How do you quantify when there is a supply of goods, supply of services, to quantify saying that my value of goods is less than 25%? A very classic example of your street light maintenance. When I am taking a contract of this maintenance, I may have a labor activity of replacing the worn out parts. I may replace the entire cable when there is a necessity of some natural calamity. So I cannot readily quantify certain contracts where this is the value of goods, this is the value of services. So there is an anomaly with respect to this entry called 3A, supply of pure services with a permission of goods up to 25% of the supply value. This correction, this particular entry, which entry 16, which talks about your passenger transport service. This is a particular support which is given by central government by way of what? Viability gap funding. There are few areas identified. As per your Niti Aayog and a couple of other programs, where smaller places like say your Madurai or Vijayawada or Rajahmundry or Ballari, there are small places where you don't have airport connectivity. To have the airport connectivity under this Niti Aayog program, government said, look, you set up your services. As a part, like we don't have funds, we don't have enough funding to get into this infrastructure support. Rather, we will support by way of this viability gap funding for a period of 1 year to set up your services of air transportation. Initially, government said for a period of 1 year, whatever funding is given by the central government, that shall be exempt. That particular 1 year, they have extended for a period of 3 years. This is one entry which I was referring to, Rule 42, Rule 43, with respect to exempt supply, what shall be excluded, what shall be included. We were referring to supply of transportation of goods, services by way of transportation of goods by vessel. When the explanation was inserted, they said any services by way of transportation of goods by vessel shall be excluded. When we look into this entry, 19A, 19B, 19B has a reference to services by way of transportation of goods by vessel, which was covered by Rule 43. 19A talks about services by way of transportation of goods by an aircraft from custom station clearance to in India to a place outside India. This is something what they say exempt. Any service by way of transportation of goods by aircraft is exempt. However, this particular entry was missed out in your Rule 43 explanation which was inserted. And look at the beauty, they say this exemption is applicable only till 30th September 2018. What will happen after 30th September 2018? We have to see further amendments. This is something like your 9.4 with respect to reverse charge mechanism. Till 31st March government said we have deferred. So we have to wait till 30th or 31st March to see whether the reverse charge mechanism is going to get extended further under 9.4 or not. Most of the people have this particular question with respect to educational institution. Now, educational institution, whatever services given by educational institution are exempt. Not so. Educational institution may give education, may provide facility of transportation, may provide career counseling program, may also provide renting of immobile property for various other purpose. Take example. We have this Vijaya PU college where we use the premises for the purpose of conducting our CA examination. Now when we look from the institution perspective, whatever revenue earned by the institution should be meant for education purpose. I may also have a revenue which is other than my education purpose. Part of that, this transportation activity. This educational institution has got a pick up and drop facility of students, faculty and their staff. Whether this shall be taxable, there is an entry called 66 which was separately dealing with respect to your what services are exempted by way of an education institution. Only those services which are by way of education, they say it is exempt. What happens to the other? To the extent of your pre-education or till higher secondary education or equivalent, they say it is also exempted. What is exempted? Pick up and transportation by way of transportation, providing midday meal or any catering service. These are the two aspects in addition to education which was exempted. This entry has brought a clarity with respect to transportation of the students, faculty or staff. What they say, take example of one techno school which is in Kormangla. This techno school doesn't have transportation facility, its own buses. What they do, they give the activity of pick up and drop facility to a contractor. Contractor may not have enough vehicles, he may hire the vehicles from some other contractor. So techno school has given a contract to a contractor called A. A in turn has given the contract to B. Now when B is giving the vehicles on rental or lease basis to A, whether we should charge GST for that, because A is using for education purpose. Now when A using the transport vehicles for the educational institution, there was an exemption notification. Now what about B who is giving the vehicles to A, whether that is covered under exemption? That was clarified by way of this entry saying that if B is giving the renting of vehicles or leasing of vehicles to A, who in turn uses for the education institution, then it is an exempted activity. Condition, they say the education institution should be providing services by way of a preschool education, education up to higher secondary school or equivalent. For only those institutions, the services of B to A shall be exempted. Other than that, it shall not get exempted. Theoretically, looks very good, it sounds very good. Practically, if you have to see, it is not so easy to establish, because B might be having 10 vehicles, A might be having 20 vehicles. Now, A may use a few days B's vehicle, B might use out of 10 vehicles any other vehicle for the purpose of transportation to A. How do you establish practically that these vehicles owned by B, only those set of vehicles were used by A for those particular days? You don't have a law which can be set up or which can be established saying that these are the days I have used for so and so plane, for so and so route, and this is what I am charging GST, for this I am not charging GST. Practically, unless your documentation is strong, this particular limb of exemption is not going to be an easy sail through. Insertion is good, but application of this particular provision is not so easy to withstand law unless documentation is strong enough. Preschool, it is exempted. It is exempted. It is exempted. Preschool, it is all exempted. Tiny toddlers, they are not capable of paying GST, so they have kept that also outside. Legal services. Now, central government wants to protect its own interest. They have brought a clarity for their own purpose. They have made an insertion in entry number 45. What they say, if state government, central government, union territory or local authority, any governmental authority or a government entity receives services by way of a legal or accounting service as a recipient, that shall also be exempted from payment of GST. Earlier this entry was not there. Now they have brought in saying that we should not pay tax, it all should be outside the purview, only for legal and accounting service. So if at all, if you are providing any services in the strength of a chartered accountant, may be taxable. If you are providing services in the strength of an advocate, shall get exempted. Also they say, any services provided by arbitral tribunal, partnership firm of advocates, senior advocate, all services provided by these set of people to a central government, state government, local authority, etc. shall stand exempted. Chartered accountant, it is taxable. Next. They say there was a new entry called 66 in the same, some new insertion say in relation to education service. Any educational institution providing service by way of conduct of entrance examination against consideration in the form of entrance fee. So any entrance fee collected, earlier it was not finding any entry, because this entrance fee, whether it is in relation to education, was a question mark which was raised, which they have clarified by way of entry saying that entrance fee collected by education institution also exempted. Then services to an education institution by way of supply of online education journal or periodicals, it was taxable except education. It is taxable in the hands of preschool, higher secondary school, vocational education course. This any service provided by online journals or online periodicals, that is something which was subjected to GST. Again, they said in relation to education institutions, we believe that primary school or up to higher secondary school, they doesn't have anything to do with your online journals, etc. So they brought that under tax purview. With respect to renting of immobile property, again, they have brought saying any renting of immobile property activity undertaken by the state government, central government, etc. to any registered person, that registered person shall pay GST under reverse charge mechanism. This is a new entry which they have inserted with respect to renting of immobile property. This is one entry with respect to real estate, which is going to create ramifications. This is an entry which has come in the month of February. Careful reading of this particular notification, many doubts were raised by senior professionals whether there is an authority for a notification to talk about a levy. This notification was inserted as per the section 148. Section 148 talks about clarification or identifying a person with respect to registration, payment of tax or filing of returns. Indirectly, which cannot be done directly, was touched upon by way of this notification called 4 of 2018. First, let us read through to have a better understanding. They say registered person supplying development rights to a developer, builder, construction company or any other registered person. So they have used a language called registered person. If I am not a registered person, probably I will be jumping out of this particular notification. They say registered person supplying development rights. What do you mean by development rights? JD? TDR? If at all, if there is a landlord who is giving a development rights, that was deemed to be a supply. That was deemed to be a supply. Point number 2, registered person who supply construction service of complex, building or a civil structure to supplier of development rights. There are two limbs which are covered here. Let's take an example to understand a little more clearly. A, who is a landlord. B, who is a builder. A and B get into an agreement. A says, look, I am going to give you a power of attorney or right for the purpose of construction. B, who is having a knowledge of this construction, gets into agreement with A for a mutual understanding of joint development. Registered person supplying development rights. A is a person who is giving access to B for the purpose of construction. What they say, registered person supplying the development rights. The rights which are given, uncontrolled rights which were given by A to B was deemed to be a supply by way of this entry. A registered person supplying developing rights. Now when I give a developing rights, whether there is a consideration which I am receiving, if at all if there is a consideration, in what form the consideration is being received, and if we talk from B's perspective, B is going to get a right in the land, is not going to get a right in any other thing. When he is going to get a right in land, land is something which is covered under Schedule 3. Then it is not a GST item, whether GST should be paid for that particular land portion. All these were the questions raised by the senior professionals with respect to this notification. So point number A says, from A's perspective to B's perspective, a registered person supplying development rights to a developer, builder, construction, etc. Point number B, carefully examine this. Registered person who supplies construction service of complex, building, civil structure to supplier of development rights. B, as a builder, is giving what? Construction service to A. So in point number A, they are saying that there is a supply of development rights. In point number B, they are saying that the builder is giving a construction service to A, who happens to be a landlord. As registered persons, liability to pay GST arise when the said developer, builder, construction company or any registered person transfer possession or right in the constructed complex, building, civil structure to the person supplying development rights by entering into a conveyance deed or similar instrument, within brackets allotment letter. You scratch my back, I scratch your back. This is what they are trying to say in this particular notification. A, because is giving a rights which is called development rights to B, this particular entity says that whatever development rights you are saying, that is subjected to GST. In turn, what they say, B is giving a construction service to A, which is also deemed to be a supply where GST is applicable. So A has to raise an invoice on B to the extent of development rights, and in turn B has to raise an invoice on A to the extent of construction service. When we have to do this is time of supply at the time of execution of conveyance deed or any similar instrument allotment letter. Now JD is something I get into at the inception stage of discussion. When A and B get into business process, A and B get into the JD process. The moment I sign off, can that be called as a conveyance deed where the liability gets crystallized without even the construction activity happening? Where is the question of calling for your time of supply? Further, from A's perspective, when he is passing on the ownership in land, whether the ownership which is being passed on by virtue of land, can it be construed as a supply of development rights? If so, what should be the valuation? And assuming if A has got a parallel agreement with individual customers to buy the property, say A and B get into a contract of developing 5 floors. A says I get 25% share of construction. But before, at the time of conveyance deed is framed, A gets into a parallel agreement for making a sale of such particular portion to individual customers. Because there is no occupancy certificate, it is deemed to be a supply under Schedule 2. When there is a deemed supply under Schedule 2, A should be liable to collect GST from the individual customers. B, who happens to be a construction person, he says, I am going to take 2 years for doing this construction activity, let me raise the invoice after 2 years. What happens to A? By the time the possession is given by B to A, to the extent of GST, what builder is charging on the landlord, the input tax cannot be enjoyed, because by the time the builder is raising a bill, occupancy certificate is already obtained. So whatever tax B is going to bill on A is something which is going to be a cost. Assuming A has got multiple projects, probably that input tax credit can be enjoyed elsewhere. If it doesn't have multiple projects, he will be ending up with the GST portion, which is not in his hands for setting off for the sale which he is going to enter into. So this one notification has got multiple ramifications with respect to validity of levy itself, because the authority was given with respect to registration, with respect to filing of return, but this particular authority was drawn to the extent of development rights by deeming to be a supply. So this is one notification which is going to create ramifications in the real estate sector for collection and payment of GST. With respect to motor vehicles, they have given a clarity by way of this notification. They say they are all the vehicles which are old and used vehicles. If your vehicle is a petrol, LPG, CNG having a cubic capacity of 1200 or more, rate of tax applicable 9%. If it is a old and used driven motor vehicle having an engine capacity 1500 or more, which is a diesel engine vehicle, the rate of tax applicable 9%. SUV again 9%. All other vehicles which is not fitting into above 3 categories, rate of tax they have given 6%. For doing the valuation, they say they have given an equation. If at all the registered person using this vehicle as a business asset where depreciation is claimed, how do you calculate the value for the purpose of GST calculation? They say value is equal to whatever consideration you are receiving, from that reduce what is the depreciated value. That should be the value which is deemed to be a supply value for the purpose of levy of GST. In any other case, I am a trader who is buying and selling. What is your purchase price? What is your selling price? The margin of that shall be subjected to GST. Hotel accommodation. This is one service one service again has opened lot of confusion. How to interpret, why to interpret, way to interpret. With respect to hotel accommodation, there was a circular issued clarifying all different permutations and combinations. What they say, if at all, if there is a hotel accommodation, whether GST should be charged on actual tariff or declared tariff. Actual tariff is something what I am going to collect, declared tariff is what printed on a particular media. The clarification says that tariff is only a parameter for identifying whether you are supposed to pay GST or not. Assuming declared tariff is 1500. If the tariff is more than 1000, I am supposed to pay GST. If the tariff is less than 1000, there is no GST applicable. Declared tariff is 1500, but I am collecting from the customer 750 rupees. Should I need to pay GST? The answer to that, they clarified that. Look, declared declared tariff is one parameter what we are going to hold on to identify whether it is taxable or not. The moment declared tariff is more than 1000, it is taxable. Should I pay on 750? Should I pay on 1500? The transaction value comes into picture. It is not the declared tariff which you have to consider for the purpose of levy of GST. What if I move from one slab to another slab because of extra bill? They say my room tariff is 5000. I happen to collect 7,500 because of some extra bed and other amenities taken. They say if you are fitting it as tax slab of say 9%, you need not jump to 14% just because your room tariff went beyond 7,000. Declared tariff happened to be say 5,000 or 6,000, which is beyond, which is less than your declared tariff. Because of some additional charges, if you are going beyond 7,000, don't worry, you pay the regular tariff, regular slab rate. How do you deal with GST for an upgrade? This is one scenario what I have considered like your railway reservation. I have done a railway reservation for sleeper class. Because of seats available in the AC class, I get promoted from sleeper class to AC class. Same way, take example of a hotel. In a hotel, say 5-star hotel, there are rooms which are available for 7,000, 8,000, 9,000. As a customer, I have done a booking for 7,000. On a particular day where the booking is done, the room tariff for 7,000 was not available. I will accommodate the customer in a room where the tariff happens to be 9,000. But I will be collecting 7,000 from my customer. Should I collect GST on 7,000 or should I collect GST on 9,000, which was a tariff for that particular room? They say whatever is the transaction value, because of any upgrade happening, transaction value does not alter. Pay the GST on your transaction value, which happens to be 7,000. Gambling, casino, etc. This is one entry where the higher rate of tax is applicable at the rate of 14%. They have sought clarification when we are collecting taxes. Should I pay only on the entrance fee or any other amounts being collected? Should I pay 28%? There was a clarification provided saying that any amount collected towards your casino or betting, that should be attracting 28% by way of an entry fee or betting. Any other services provided by supply of food, etc., that should be at regular rate, not at the higher rate of tax. This is one query what they have raised with respect to providing hotel accommodation, homestay, etc. by way of through e-commerce operator. Homestay providing accommodation meant for residential or lodging purpose. These days, after e-commerce has come into picture, all these homestay, etc., instead of publishing their own hoarding, etc., they get tied up with all the big people like Trivago or your Oyo, etc. I have a homestay where I get connected with Oyo or Trivago. Trivago is a portal where it publishes all the accommodation services with the tariff which is available. As a customer, I choose which hotel I have to stay. I may make the payment to the respective hotel fellow directly or through the e-commerce operator called Trivago. Assuming I am sitting in Bangalore, I am traveling to say Madurai. When I am traveling to Madurai, I want to find an accommodation where I can stay for 2 nights. Instead of going there and finding an accommodation through Trivago, I found an accommodation in Madurai. When I pay to the hotel fellow and the booking is done through an e-commerce operator, there was a question, should I need to get registered as a hotel fellow in Madurai? My total turnover in that particular year does not cross 20 lakhs where I should get registered under GST. Now when I am not getting registered under GST, since I am providing services through e-commerce operator, should I need to get registration under section 24 which deals with your compulsory registration? The clarification provided, look, as a service provider or as a supplier, does your turnover cross 20 lakhs? If answer is no, though you are providing services to e-commerce operator, there is no mandate in that you need to get registered under GST for this particular hotel accommodation or homestay service. This is a query with respect to identifying of books. Should I identify supply of books as goods or services? Looks a silly question, but they have explained various permutations and combinations. How do I publish a book? On whose account I publish a book? When if I am storing books in my store where the legal rights, copyrights are pertaining to some other owner, whether should I call a supply of goods or supply of services? If I call supply of goods, one rate of tax. If I call supply of service, another rate of tax. They have simply clarified this question saying that, look, as an owner of a shop, you are having books. If you are selling the books, are you the owner of the books, having title to that books? If you are owner of the books having title, then you call supply of goods. You are not having the ownership or you are not having the title to those goods. It is deemed to be a supply of service. That is what they have clarified in this particular entry. Legal service, this is one sector everyone like our fraternity and other fraternity is trying to compare. Why there is a special treatment with respect to advocate services compared to a chartered accountant service or a cost accountant or a company secretary. As a legal advocate, I can do a representation service. I can also do bookkeeping services for my customers. So as a legal advocate, do I need to get registered under GST? Answer is no. Legal services, they are covered under reverse charge mechanism. Now this particular aspect they have clarified further. In case of legal services, including representation services provided by an advocate, etc., GST is required to pay by the recipient of the service under reverse charge mechanism. So either a legal service of representation nature or legal services of any other nature, the recipient should pay GST under reverse charge mechanism. Again, they have made a more clarity with respect to legal services. Next, this is one good clarification which they have provided, which is actually a confusion to the existing clarification. When we refer to notification 12 of 2017, there was one entry called 66 which deals with your education institution. Very, very effectively and very clearly they have explained with respect to an education institution, if an education institution is providing so-and-so set of services, it is not subjected to GST. One of that aspect with respect to canteen facility, they have clarified by way of a circular. What is happening? Education institution having mess facility for providing food to their students and staff. Such facility can be managed by students themselves, education institution, or can be outsourced to a third party. In any of these combinations, who has to pay GST or when does the GST get attracted? They have clarified that education institution satisfies the requirement as per entry 2Y of 12 of 2017, hence no GST. In other cases, 5% GST is applicable. This entry was clarified by way of saying that no, education institution has to collect GST. Within a week's time, again there was a correction made to that circular saying that with respect to education institution, since there is a definition which is satisfied under notification 12 of 2017, no need to collect any GST if the canteen is operated by the education institution. If the canteen is not operated by education institution, someone else is operating, they said yes, 5% GST is applicable. By clarifying so, they have raised a question, the canteen managed by the students. They say if the canteen is managed by the education institution, it is under exemption. What if the canteen is managed by students? By virtue of this circular, we draw understanding that a canteen managed by students shall be subjected to GST if they have a turnover or collections more than 20 lakhs, which is unlawful, which is not required at all. The clarity which was existing, which was operated by education institution, was clarified, was wrongly clarified, again by rectified. All the mess was created. In between, they brought students who were operating in the canteen to get into registration. So in all college campuses, etc., GST is going to be one theme. Indian Railways, this is one clarity what they say. See, as a supplier of goods, when I am making a supply of goods to Indian Railways, there was a concessional rate of tax applicable called 5%. When we refer to the notification 1 of 2017, any supplies made to Indian Railways, the general misconception that 5% is the rate of tax. They clarified that, don't worry, only the goods which are falling under chapter heading 86 shall attract this lower rate of tax called 5%. All other chapter headings will be taxable at the regular rates. Input tax credit, only with respect to this entry number 86, there is no input tax credit. All other supplies, whatever you do to Indian Railways, taxable at regular rates and input tax credit available. Again, with respect to this authority, they have bifurcated. Section 73-74 deals with your issuance of a show cause notice. Initial version, section 73, which deals with your non-payment of tax, short payment of tax, availment of input tax credit, wrongly. That is dealt with section 73. All the same aspects availed with a malified intent with a fraudulent activity was covered under 74. So if at all, if there is an intent of fraudulent activity, it was covered under 74. No intention of fraud, it was covered under 73. Initially they said only superintendent is authorized under 73. 74, it is in the jurisdiction of a AC or DC. Since they found that AC, DC doesn't have big job, other than issuing these notices, they say let superintendent also do this job with respect to issuance of notice under 73 or 74. Again, hostel accommodation provided by a trust. Unwanted clarification, unwanted miss. What they say, if at all, if I am having a trust which is running a hostel facility, should the trust collect GST on that particular hostel facility? They went on explaining what is a trust. What is the definition of trust as per section 12A of income tax? Again, read with your entry in notification 12. All that explanation say, nowhere you have a activity called renting of a mobile property or any this hostel facility. Since you are having a facility which is not as per 12A, that is taxable. Conclusion they gave, if at all, if you are having a declared tariff of 1000 per day or above, then it is taxable under GST. If it is less than that, it is exempted under GST. Now, where is a hostel where you have a declared tariff, where you are going to correlate for that you have to pay per day so much? Generally, hostels we have monthly 5,000, 6,000, etc. Luckily, they have used a term called 1000 tariff or equivalent. If they have not used a term called equivalent, all the ramifications would have started that. How do you define that there is no declared tariff? 5,000 you are collecting, that can also be considered as a declared tariff. So all this they have put to an end saying that since you are not having a declared tariff more than 1000, if you are not having more than 1000, then it is not subjected to GST. Fee paid with respect to complaints in consumer redressal code, they say it is not subject to GST. Hospital sector. A big relief is given to hospital sector by way of this circular. Till this circular has come, lot of mix and matches of opinions were roaming around. First point, query, they say consultation charges paid to the senior doctors. Take an example. I have a small clinic somewhere in Malleshwaram. There is some heart surgery needs to be done. I call a doctor from so-called Fortis or Apollo hospital. When a doctor visits on my request, I am a hospital entity. I have a patient who was admitted in the hospital. If a visiting doctor visits my clinic, should that be called as a clinical establishment support in relation to healthcare, or should it be considered as business support service? They have clarified that though a visiting doctor is coming and is doing an activity on behalf of the clinic, not on behalf of the patient, that shall not be considered as a business support service. It should be considered as healthcare service and no GST is applicable on the consultant fee. Retention money for post payments to doctors. Usually, if you see these big hospitals like Apollo, Fortis, etc., you have list of doctors who are there in the panel of these hospitals. None of those doctors are employees. None of those doctors have full-time practice with that particular hospital. What they do, they lend their name to the hospital, saying that, look, from morning 8 o'clock to 10 o'clock, I will be visiting your hospital. From 11 o'clock to 12 o'clock, I will be visiting that hospital. So these people keep rotating from place to place. Now, when a patient comes as an OP patient, the hospital collects say 500 rupees as a consultation fee. Hospital retains 200 and pays 300 to the visiting doctor. So there was a question raised, to the extent of that retention money of 200, should the hospital needs to pay GST? Why? Hospital is providing a infrastructure. Hospital is providing a facility to meet the patient with the doctor. So should it be considered as a renting of immobile property? That was clarified saying that nothing doing. Since there is a retention money which is in relation to healthcare service. When a patient is visiting to a hospital, is visiting for the treatment which is called healthcare service. Though there is a retention money agreement between hospital and doctor, to the extent of retention money, it is not subjected to GST. Food supplied by hospital from their own canteen to inpatients. Again, this was a case which was hanging over from VAT era, which was also brought into GST era. Part of the healthcare service, if there is a food supplied to the inpatient, if there is a food supplied to the doctors or their own staff or the other outsiders, whether GST is applicable. Needlessly, they have clarified that if at all, if there is a service provided to the inpatient, because it is as per the dietitian or nutrition, it is not subjected to GST. If the food is provided to the staff or any attendants, it is subjected to GST. This is one circular. This is one circular. As if like they are clarifying, they have kept the question open. If you read this particular query and if you read the answer, as if you are going and asking a doctor, I am having problem with my stomach. What should I do? Should I eat this oil food or should I don't eat oil food? Doctor says, it's up to your wish. If you feel it is paining, don't eat oil food. If you feel you can withstand, eat oil food. That is how this clarification is given with respect to bodybuilding activity. Activity of bus bodybuilding is it supply of goods or supply of services. All these big vehicles like generally when you see Ashok Leyland or another vehicles, only the chassis is given by the manufacturer. The body gets built by some other private player. So when I buy a chassis from a manufacturer called Ashok Leyland, I go to a person who does the bodybuilding activity. That person who does the bodybuilding, should he call that as a supply of goods or should he call that as a supply of service? That was the question. Now doing that structure, I have to use sheet metal. For doing that structure, I have to apply paint. For doing that structure, I have to do the welding activity. There are multiple goods and services which goes as a composite supply. Circular says, look, that is a composite supply. As if they have invented something new. It is a composite supply. They say, classification of this composite supply as goods and services would depend on the principal supply. What is principal supply? I go for bus building activity. Are you interested in the service? Are you interested in the structure? I'm interested in service, I'm interested in structure. Both are required. Why do I go to that contractor? Because he has got a good service, he has got a good material. What is the principal supply? Both goods and services. What they say? Shall be determined on the basis of the facts and circumstances of each case. So each case, you should understand the facts, you should understand the circumstances, you take a call whether it is supply of goods or supply of services. So this is one circular which is vague, which has no clarity. Whether retreating is a supply of goods or services. Again, this is one issue which was long pending from central excise era, retrading activity. Should you call retrading activity as a manufacture or should you call retrading activity as a service? If I call it as a manufacturer, then I have to pay excise duty. If I call it as a service, I should pay service tax. So this was a question which was raised under GST. Should I call it as a supply of goods and pay GST on the goods? Should I call it as a service and pay 18% as service? They have clarified that, look, retrading is more like a service in nature. When you are retrading, predominant supply is retrading, which is as the name says. Value may be one of the guiding factor for determination, but not the sole factor. This particular paragraph is very much helpful couple of for other litigation. See the language they have used. Value may be one of the guiding factor for determination as goods or services, but not the sole factor. When I am doing a retrading, I have old tape on which I put on rubber, I bring it to the original condition. I may have labor, I may have material. Should I go with the value of labor or should I go with the value of material? This circular says money may be one of the factor but not the sole guiding factor. Supply of retraded tiles, where old tiles belong to the supplier, it shall be treated to be supply of goods. They have raised a question, if I am doing a retrading activity, my own tail, when I am selling after retrading, it is deemed to be a supply. When someone else's tail is coming, I am putting a new layer, I am cutting the extra parts, I am giving it back. Should it be called as a labor? Should it be called as a supply of goods? Again the clarity was left open. It is open to the department. If the rate of service is 18%, if the supply of goods is 28%, the officer hands over to supply of goods saying that 28%. If the labor is 18% and supply is at 5%, he says no, it is not supply of goods, it is labor. So this retrading activity, they have clarified only with respect to the supplier retraded goods. The goods which have come from the customer for the purpose of retrading, there was no clarification provided. This is something to do with a banking called priority sector lending certificate. Usually they get this certificate from RBI, priority sector lending certificates. RBI issues this certificates to the bank. These are the certificates which are intended for trading purpose, or it is as good as your negotiable instrument which can be transferred. This particular clarification they say, because it is a certificate which is a transferable certificate, there is an applicability of GST. There is applicability of GST, and whatever GST you have paid, banks can take the input tax credit. DISCOM, this is your distribution service of electricity. This clarification says, as a person who is into distribution of electricity, there are a couple of ancillary services like application fee for releasing connection, rental charges against meter, testing charges for transformer or meter, labor charges for shifting the meter, charges for duplicate bill. When there are various services provided by this operator, should there be applicability of GST? Because electricity is something deemed to be goods where there is an exemption. Whether all these ancillary services also be exempted, they clarified that no, only electricity is subject to exemption. All the ancillary services provided by so and so are subjected to GST. This last slide, guarantee fee paid by state governments or state-owned companies against guarantee commission. Now, the local state governments usually extend guarantee provided by central government or state government to business entities including public sector undertakings. When they extend the guarantee to a financial institution, part of that guarantee they draw something called as guarantee commission fee. Whether this guarantee commission fee charged by so and so called state government, shall it be attracted to GST? They clarified that yes, because they are drawing a commission called guarantee commission, it attracts GST. That is what they have said.
This is a RCM, right?
Reverse charge mechanism. It is under reverse charge mechanism. If it is to a business entity. Yes, sir.
What is the tariff that we take in case of multiple tariffs that I say direct customers one tariff, some portal there is another tariff, the third portal there is another tariff. So what is the GST implication or how will GST be calculated?
Declared tariff. Declared tariff.
Declared tariff, yeah, I have multiple declared tariffs.
Transaction value. They go with that. See, declared tariff is only to identify the tax rate. Will you fall under 12%, 18%, just to identify the tax rate. But however, tax shall be levied on your transaction value. If you have declared, say 7,000, your tariff happens to be 28%. Though you collect 5,000, you have to pay 28% of 5,000.
Correct, sir. Still, declared value, from where do I get it? Whether it is what is there in the...
It is published at the counter, it is published in the pamphlet, whatever you selected. That will be a declared tariff.
So if I publish some other rate in the portal, say OI or Trivago, that also can come under...
that also. Highest of that, highest of that officer will be drawn.
And again, similar situation can arise in a season time and non-season time.
Season time. They clarified that when the season time, the occupancy happens, what is the declared tariff which is at season time, that should be considered.
Only for that season.
Yes.
So the notification on depreciation
Motor vehicle. Use motor vehicle.
the value is negative.
No need to pay GST. Ignore that.
Ignore the negative, ignore the value itself.
Ignore the value.
Value itself. And again you said that in case project to project, if the landlord has got other projects and input tax is being GST is charged, can he set up against other project? I doubt.
So input tax credit earned, there is no mechanism like your Senate credit rules 2004, where you should have used such input services in so-called manufacturing facility. That particular restriction which was there in Senate credit rules was not existing in your GST era. Once you have earned an input tax credit, you have a choice to utilize.
With other projects also.
Yes, sir, very much. There is no restriction within the state.
So this charitable trust, they are immovable property on which they collect the GST.
Yes, sir.
And simultaneously there are some construction activities for which they pay GST to
Yes.
the contractor. And they take input tax.
Sir, charitable institutions, do they have any taxable income?
Yeah, I said no, because they have some premises
Ah.
for which they get rent, on which GST has been
If they are having taxable, okay, on rentals you are saying?
Yeah, correct.
So there is section 17, subsection 5, which deals with your works contract activity. Okay? This 17.5 restricts your input tax credit in relation to works contract. If you are having a works contract, you are barred from taking input tax credit. You cannot take.
No, it's not host contract. What I'm trying to say, you have premises, charitable trust, for which you are getting rental income, on which you collect GST and remit it. Simultaneously, you pick another building, wherein you are paying to the contractor for building.
Sir, building is deemed to be a works contract as per section 2119A3.
Can I take that input,
You can.
make it set up?
You cannot take. 17 has a clear explanation, you cannot take. Unless you are in the line of construction where you receive the services for making further supply, you cannot take the input tax credit.
So that's what I say that collectors, there is no question of taking
You are barred from taking the input tax credit.
Thank you.
If I am in an educational institution who is only supplying an exempted service and I am importing any service, so should I get registration under section 24 and pay RC?
Yes.
Because 24 doesn't override 23 and I do satisfy the condition in 23.
With respect to outward, 23 is with respect to outward, 24 is with respect to inward.
So nowhere it says that on section
23 is with respect to outward, 24 is with respect to outward and inward. There is no connectivity of 24 read with 23 with respect to your import activity.
So if I pay any exam fees to a foreign college, even then it becomes an import of service and I need
Subject to the education institution other than primary or secondary education school. Subject to that. If it is exempted, no need to get registered for payment.
one more. If I don't have exports in a particular month, how do I claim that?
If I don't have exports in a particular month, how do I claim a refund? For claiming refund, there are two situations which are explained. Situation number 1 with respect to inverted structure. Situation number 2 with respect to zero rated supply. If I have inverted structure, definitely I can claim the refund. I don't have any zero rated supply, I cannot claim a refund as good as that.
I am into exports.
Correct? You don't have a zero rated.
No.
You are not fitting into the definition, satisfaction of 89.
But whatever input credits I use is only for the
Accumulate, carry forward till you have a zero rated supply.
But in the portal it doesn't allow you to carry forward and then claim the refund of the activity.
You can file a suit on GST portal, don't worry.
Can I accumulate the credit in the month?
Very much. There is no restriction.
So I can file a nil return.
Yes.
Can you just
Accommodation, the directors are traveling then.
Coming in.
The hotel accommodation, the management of the directors.
Personal in nature or business in nature?
No,
Business in nature.
So what?
Can they claim the input tax in the state?
They can. Now again, the issue comes there only. When you are taking the input tax credit, is it a common service or it is a specific service? Manager, like when you say a technician, specific. When you say manager, maybe a specific. When you say a director, is it specific or is it common? How do you justify? There is your point. Eligible, but how do you justify, how do you satisfy with your reasoning for the purpose of availment and the passing on? All that makes sense.
I have a doubt in section 51 where we have to pay interest on the tax. Now it says interest has to be paid on the tax, whether it has to be on the output tax or it has to be on the net tax. That is output minus input.
Net. Though your file written, not file written, it is your net tax
The
only.
recent changes after this 21st February, I have CGST output, let's say 100 rupees and SGST is 120 because 20 I have settled, I have an IGST input of 20 rupees, so I have set against the CGST output. Now when I am paying the interest of CGST on 100 rupees, let us say it's 15 rupees, automatically SGST is also calculating 15 rupees. I am not able to amend it. I am not able to edit that.
It should not be. Take a
It's
screenshot.
a live example.
Take a screenshot of that and shoot it to the BBNs. It should be a logical issue which was not said. Take an example again. Say you have a turnover of 7 lakhs. By mistake you have applied instead of 15%, 5%, you have applied 5 into 5. 7 into 5, it becomes 35 lakhs. I have put in the portal, 7 lakhs is my taxable value, I have put 35 lakhs as my tax. System should not permit. It should not be in a position to calculate something which is not possible. So this set on, set off, there is an ambiguity with respect to utilization, crisscross calculation, which has to be settled. Takes time.
It's just the issue of the GST portal or it's
Issue of the GST portal. GST portal.
I have a second question where I buy a lot of scraps from a lot of household items and residential units. But what I do is I buy the scrap and I segregate between paper and plastic. I buy at 18% but I sell it at 5% because it's covered under the notification. In what way will
When you buy,
Yeah.
you are paying 80%.
Yeah.
Is your supplier registered?
No, please. In few cases they are registered. Like for example, an association.
Okay.
apartments or residential
Okay.
commercial buildings. So they are registered, then they are charging 18%. But when I'm selling it, I'm segregating between plastic and paper, rest of the all items, it's no use for me, it has no value.
Okay.
I'm selling at 5%. Will there be any problem to justify that my sale is also 18%, not 5%? How do I justify it?
Need not. It is a genuine business case. It will not be disputed. It will not be.
So the supply chain management can be explained by the
Very much.
process.
Very much. You're in the process of segregation. Your process of segregation. I may have an import which is subject to 28%. Post-processing activity it may line up at 18%.
Yeah.
Take an example of your contract manufacturing activity. I have an engine which was purchased at the rate of 28%. The same engine, when I do a contract job work called manufacturing activity, it is subject to 18%.
Okay.
Now, will the department question me that 28% should be paid? No. My process is such a way 28% gets converted as 18%.
Thank you.
Sir, I have been allowed incentive bonus by my supplier. So he is given me a credit note without charging GST. Now, do I need to raise a debit note with GST?
Sir, credit note, debit note is covered under section 34. Supplier of goods, supplier of services alone has the right to issue a debit note or credit note under GST. Recipient does not have any right to issue a debit note or credit note under GST. First, this is a fact we have to understand. Now, when you have made a supply of goods where GST was collected, subsequently you have to issue a credit note because of some various reasons. You can very well issue a credit note with GST. Now, it has an impact on your recipient. Why? He has to reduce his input tax credit. Now, if he says, why should I reduce my input tax which is a burden to me? I don't want your credit note. I want your credit note without GST. When you say issue of a credit note, you have to file with your GST1. The moment you file your GST1, it goes and sits in the GST attorney of your recipient, where he has to accept that credit note, where there is an impact on reduction of input tax credit. So deal with that appropriately, saying that I am a supplier of goods, I have to issue that particular document. If my recipient is willing, not with the GST, take a call, non-GST credit note, non-GST debit note. There is no hard and fast rule that we should issue with GST. It's a right in one's hand, it is a benefit in someone's hand. That's all.
So throw some light on PMFI scheme from the developer or contractor point.
So this, okay, little bigger topic. I'll handle smaller questions, then I'll come to that.
Okay.
My question is on the, when I provide a service to a unit in SEZ, under the service tax regime,
Yes.
I could avoid service tax by getting a form A2.
A1, A2, yes.
What is the corresponding thing? I am told under GST, service provider need to get the appropriate form. So what is the procedure under GST?
So your question with respect to SEZ supply was covered under section 16 of IGST Act. Fortunately, there is another rule called 89, which 89 read with your 96 deals with your these two aspects. 89 directly says when you are making a zero rated supply, get a acknowledgement called endorsement from the authorized officer of SEZ operations for the recipient of receipt of goods for authorized operations, for receipt of services for authorized operations. So indirectly your question is answered saying that whatever supply you are making, whatever invoice you have, get an endorsement from the concerned officer of a SEZ unit. That shall suffice as a documentation.
So the service provider has to get updated.
Service provider has to get from the recipient.
I'm an exporter of service. I don't have LUP for 17, 18 I paid GST on exports. If I pay LUP in next financial year, can I claim the unutilized?
Question is not clear, man.
For financial year 17, 18, I'm an exporter of service and I don't have LUP.
Okay.
So I paid IGST at the time of export.
Okay.
If I take LUP in the next financial year,
Okay.
can I claim unutilized input tax credit? Accumulated.
Okay. Answer is, see, unutilized input tax credit is eligible only in case of your exports. When you are paying GST and exporting, you are barred from taking the refund of input tax credit. You will not be in a position to claim a refund where you are already paid and claim a refund. Will not be.
I would have claimed only to the extent of amount paid on exports. So the remaining I can only carry forward. So that cannot be. If I take LUT in the same financial year?
That is different, this is different. LUT has got only with payment, without payment. Claims of refund is subject to your export activity. I will wind up my session here. Thank you for your patience hearing. Over to you.
On behalf of the branch and all the members present here, thank you very much for an excellent presentation, sir. Round of applause. As a token of gratitude and appreciation, I'd like to present a memento on behalf of the branch. I request CA Viresh to kindly come forward and present memento. Big round of applause. Thank you, sir. Next study circle, we have next Wednesday on the topic labor loss management tips. I request all the members to take part in it.